Isn't it fascinating how there is a disconnect in the discussion of altcoins? Everybody discusses Solana or XRP or maybe even Hyperliquid, but even though Tron, TRX, is among the top 10 cryptocurrencies, it seems like barely anybody discusses the project. Tron is the 9th largest cryptocurrency. It's got a market cap of almost 28 billion, and it holds more than a quarter of all of stablecoins across all blockchains. And so let's have a look at the data for Tron. Does it still make sense to buy the TRX token? Let's have a look at the relative valuation to Bitcoin first. Because most altcoins tend to underperform Bitcoin long term, but that's not true for Tron. This is the Tron price relative to Bitcoin. And while there is no long-term outperformance, there seems to be an invisible ceiling. We do see positive momentum in the last 1.5 years. This here is the TVL on the Tron network. So how much capital is currently bound in the different decentralized applications on the blockchain? There seems to be not much growth in the last 4 years. Measured in Tron, this even went down. It's stabilizing now at a low level of around 17-18 billion Tron. But the decentralized finance ecosystem seems not to be the reason why Tron is able to keep up with Bitcoin's growth. There's something else going on. And I think that something else is stablecoins. The stablecoin market is growing very quickly across the board, but it's growing especially quickly for Tron. Have a look at this here. In the last 3 years, the stablecoins on Tron grew from 33 billion all the way to 79 billion. The vast majority of those stablecoins is Tether. And that's an imbalance we only see for Tron. Usually Tether and USDC is in quite close competition, but Tron mainly has just USDT. Yes, the decentralized finance applications on Tron don't see much growth. But have a look at the number of transactions on the blockchain. This tends to grow quite consistently. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. But have a look at this. This is the number of active addresses over time. With that activity, the blockchain is generating more fees as well. And again, it's the blockchain that's growing. It's not necessarily the applications on the blockchain. Here is the app fees. So Tron seems to have a very specific use case. Ethereum is used for decentralized finance, Solana is used for meme coin trading, and Tron is used for stablecoin transfers. This is the decentralized exchange trading volume on Tron over time. Again, not that much growth. Here is the decentralized exchange aggregator trading volume over time. Yes, this might be growing, but it's definitely volatile as well. And so let's try to figure out what's moving the TRX price. We are currently at 29 cents roughly. There are two ported versions of the token. There's one on the Binance Smart Chain and there's another one on Ethereum. The Binance Smart Chain has 105,000 holders. On Ethereum, we've got 20,000 holders. Now have a look at this. On the left side, we see the number of retail investors on the BNB chain that hold TRX. So to be counted for the chart on the left, a wallet has to hold at least 3,000 tokens. To be counted for the chart in the middle, it's 30,000 tokens. To be counted for the chart on the right, it's 300,000 tokens. So that's small retail holding roughly $1,000 worth of the token, medium-sized retail with $10,000, and the whales with $100,000. We can see that the Tron acquisition on the Binance Smart Chain has stopped in February of this year. That's true for small retail. It's also true for medium-sized retail, and the whales, they even stopped in May of 2024. Here are the same numbers on the Ethereum chain. They tend to be smaller. So here we are only at 688 retail investors versus 1,586 on BNB. And here we can see that retail is even exiting Tron. So really, the on-chain metrics don't really look that great for Tron. The demand for TRX does not just seem to come from on-chain purchases through Ethereum and through BNB. But there's not just on-chain trading activity. There's also the bets on the price, the perpetual futures. This is a very long-term chart. It starts in 2020 And the open interest, or the amounts of bets on the Tron price, is actually not that high. For many other altcoins, we see a constantly growing open interest. More and more people are betting on the price. That's not true for Tron. And I'd argue that this is positive for Tron right now, because there is positive correlation between open interest and price. As there's more and more speculation on an asset, the spot price tends to go up as well. So we don't want to buy at peak open interest, because that's then also when the price tends to be high. We want to rather buy at low open interest. Now, open interest isn't historically low, but at least it's not at historically high prices either, which is different to most other cryptocurrencies. The same development is true for the trading volume on the perpetual futures for Tron. And it's fascinating that most people on the perpetual futures are currently bearish on the Tron asset. Despite TRX at least performing as well as Bitcoin, which many altcoins don't achieve, the perp traders in aggregate tend to bet on falling prices. So when this is negative, when the funding rate is negative, the shorts have to pay the longs in order to bet on falling prices. It costs money to bet on falling prices. Have a look at where this peaked in the past. When most people were betting on falling prices, those shorts got wrecked and then the spot market went up. And so maybe this is another opportunity. We want to be contrarian. We don't want to do what the masses are doing, because the masses tend to lose long term. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance, into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends it over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest, issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stablecoins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk on volatile cryptos, and from volatile cryptos back into risk of stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices, and that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we're getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stablecoins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. Then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors. And that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents, because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61% ApeCoin. And this is much more in line with this picture over here, right? Charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well? This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now, you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back. No questions asked. Now, I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time, Bitcoin lost 9%. Now, unfortunately, this capital pool is already closed. But if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member. But if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to Premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!